Yeah, look, I just want to know whether or not you think I should fix interest rates at the moment.
Okay, Mark, your current situation, is it owner-occupied or investment, your loan?
I've got a couple of investment properties, and they're around about I'm paying about 4.7%.
Yep, okay. Currently in the marketplace, 4.7 is a bit of a discount off the blended average of the four major standard variable.
Yeah.
But, mate, what you could do today, because, I mean, if you listen to the comments that we mentioned earlier, when the Reserve Bank's been moving rates of recent times, the majors haven't been passing on the full 25 basis points.
That's right,
So
yeah.
one of the things to consider doing, and that's what we're recommending our clients consider at the moment, is the fixed rates currently are on average at least 0.75% lower than the actual variable rates. So it makes good commercial and business sense to give yourself a bit of peace of mind. And for some people that want total peace of mind, then you can lock it all up and fix it all. But make sure, Mark, that the product that you get gives you still the flexibility to make unlimited repayments. So the way you would do that is do that via an offset account. So ask your bank if they can give you a product that still gives you the peace of mind of a fixed rate. At the moment, the sweet spot's been somewhere between medium to long term. So in the mortgage industry, short term is like 1 year, medium term's like 3 years, longer term's 5 years. So somewhere between 3 to 4 years, you could currently secure, say for argument's sake, a 4-year fixed rate under 4% in the current market. Now, if you can do that, it's probably worthwhile considering. But if you've got some reasonable cash flow, make sure that you still look at having the option to pay extra, make unlimited repayments. And I'm not quite sure who your loans are with, but if you're with one of the major banks just recently, you'll receive a notice coming out in the mail to you saying your annual fee on your package loans are going to go up. That should come through in about 2 weeks' time. So depending which one you're with, so just be cautious that you try and get a product that doesn't have any of those fees. And the reason why I say that, Mark, is that as soon as they've got $1 of fees and charges in there, in all their contracts it says fees and charges may vary. But if they don't have them in there at the beginning, they can't insert them. So that's something that we recommend our clients look at. Look at no fees and charges, or no annual fee, no redraw fees, no penalties for lump sum repayments. And ideally, if you can have that offset bolted onto your fixed rate loan in the current market, it'd definitely be worthwhile looking at it. But that's general in nature now. Our guys are still in the office now. The team's there to take your calls. If you want to give them a call about your specific scenario, they're there now on 133 266, so they can go through your individual scenario, look at what components investment, what components are unoccupied, and what's tax deductible, what's not, and they'll ask you whether you want to go interest only or principal and interest. But in the current market, a lot of the lenders are making you pay a premium for interest only. Through AMO, we've actually got access to products where you don't pay any premium, and that one that I just recommended to you, you could consider that, where you don't pay any ongoing fees and charges at some very competitive rates. So give that a bit of thought, mate. If you exposed with quite a few mortgages, they're probably close to the fixed rates I'm talking now are probably close to the bottom of the rate cycle because they're lower than the variable. So yeah, definitely worthwhile considering.
Thank you so much, mate.
Pleasure.
Good on you, Mark. You take care, buddy.